More big news in the M&A space and gold mining here lately. Just 1 week after reporting strong Q1 financial results, Equinox Gold announced a transformational merger that fundamentally reshapes its strategic position in North American gold market. Equinox unveiled plans to acquire Orla Mining in an all-stock transaction that will create a new senior gold producer with immediate scale and an internally funded pathway to nearly 2 million ounces produced annually through advanced expansion and development across its projects. We're happy to speak once again with Ryan King, Executive Vice President of Capital Markets with Equinox Gold, on this deal and its Q1. Ryan, good morning. Great to see you. Congratulations.
Oh, thanks, Trevor. Good morning. Always good to be here. Appreciate the time.
Yeah, this is a huge deal. Huge deal. With Equinox just completing a 70% production increase from Q1 to from Q4, achieving $310 million net income. Why pursue this merger now rather than optimizing standalone operations throughout the rest of this year? I guess that's the biggest and probably the most important question you've been getting in the last week.
Yeah, I mean, obviously it's a reasonable question. People will ask themselves, why anytime, right? Why anytime do anything? But if you look at the two companies, Equinox was on a re-rate path, and Orla was on a re-rate path. Both companies had re-ratings coming with Orla on Musselwhite, and it was happening, as well as the growth profile they had behind that engine. And Equinox was the same. We were in the process of re-rating and ramping up Canadian gold production. And we had made a lot of changes at Equinox, as you recall, from the merger of Calibre a year ago to where we are today. We've paid down over $1.1 billion of debt. We've divested of some assets that didn't fit into our portfolio. And so in itself, Equinox went through a major transformation, really to put itself in this position of strength, both companies in a position of strength. And when we look forward, we believe that both companies together are stronger and will be able to accelerate that re-rating because in the eyes of a lot of institutional investors now, scale does matter in this robust commodity environment. And what's exciting about this opportunity is we're not adding complexity, right? We are staying in the same jurisdictions that each of us are operating in: Canada, the United States, and Mexico. And in a lot of cases, we're expanding operations versus building completely new mines. Case in point, Castle Mountain is a heap leach operation that is not currently leaching, but there's a small heap leach mine that we're expanding into a much larger heap leach operation as we go through the permitting process. So I think it's very complementary on both sides, and this is what we've been hearing from the institutional audience.
So what exactly have you been hearing? Like what has the institutional audience been asking for that this deal provides?
Well, the feedback so far, again, on initial views, it's only been a couple days now, is that it does make sense because of the jurisdictional complements. It does make sense, and we like the combined team led by Chairman that will be taking over, Chuck Jeunesse. A lot of expertise and a lot of experience there. Darren Hall as CEO, as we've talked about over the years, what he brings from an operational perspective, and Jason Simpson, he's current president and CEO of Orla. But both companies come with a similar cultural approach: is that operations first and a disciplined approach to delivery. And there's a lot of commonalities when you look at these two companies from that lens. So bringing them together in the new company, pro forma, will have Darren as CEO and Jason as president. So it allows for overlap of both of them, and together being a stronger company, not only from the assets in the ground, but the human capital as well.
Yeah. I think this deal makes sense, and as a shareholder, I'm incredibly excited to see what a new version of Equinox has in store for the markets here, Ryan. But Was it always going to be a merger between Equinox and Orla? This engagement, if you can, was what was it an were other companies maybe an option you were pursuing? Was it always just going to be Orla and Equinox, or was it something that Equinox decided, all right, we need to find scale, merge with another mid tier? What else might be available, or was it always just Orla and Equinox at the table trying to figure this thing out?
Well, interesting over the years, Darren and Jason had always had various conversations. I mean, going back a number of years,
Mm,
pre-Equinox, and even Darren and Jason on Caliber and discussing different things because they were on a similar path. They probably at some degree appreciated each other's approach to business, vis-a-vis execution and mining and capital allocation strategies. And it aligned well at this time because of the mix of assets, right? And it aligned well at this time because of the strengthened balance sheets approach. So this I think for both companies, this made a lot of sense at this point in time. And again, we look at the combined company's pro forma production, as we ramp up mines in Canada and more value and the assets get to nameplate capacity. You're looking at probably close to 700 to 800 plus thousand ounces of gold coming out of Canada. So a very
mhm.
compelling opportunity as investors look for safer geopolitical jurisdictions to invest in. That we'd be the second largest gold producer from Canadian gold mines, to next to Agnico Eagle. So it is profound to see where this is going, and so the mix of teams and the mix of assets uh, present a very compelling opportunity for investors in the gold space.
Yeah. Is that a strategic advantage with the concentration in Canada versus a portfolio of diversification that Equinox had
Yeah.
maybe pre-merger?
I think it's an advantage because you're
Do
diversified,
you?
right? You're diversified in
Yeah.
your actual mines. But don't forget, we're also gonna be having, roughly, what is it? Close to 350, 450,000 ounces when all mines if everything proceeds in the US as well. So really a concentrated North American gold producer, which is, quite exciting in its right. But,
Yeah.
no, I mean, I think it does, right? I think as we're seeing the evolution of things geopolitically around the world, transpire, I think that having, high quality, new, long life assets in Canada is very compelling, and in the US is very compelling.
Yeah. The
And and
announcement
and
mentioned
and
Oh,
tr
go
and
ahead.
that's what we're hearing from our institutional investors and investors across the board. We're hearing that
Mm.
we're getting that feedback that this alignment seems to make good sense, and
Did
the scale that you'll have makes really good sense too.
are you receiving institutional calls, inbound calls since this merger was announced that maybe you wouldn't have had as a standalone Equinox before?
Uh, I would say that probably to some degree, yes. Some new institutional investors looking at the combined product. I mean,
Mhm.
we've had some, like I'll give you one example. We had one Australian large account email Darren directly saying, "Hey, we met a year and a bit ago, and it wasn't a fit then, but let's have a follow-up. Let's have a follow-up
Mm.
now and see how this goes because this could be more of a fit." Another example is a large, well-known institutional investor in Canada. We are in their small cap fund, but their large cap fund, precious metals analyst, was on a group call. Now that with this size, wanting to investigate, could this be a fit for us? So it's the
I see.
graduation potentially of increased size that gets us into the increased size accounts.
Yeah. The announcement mentioned $1.4 billion of free cash flow this year with the combined entity. Can you kind of describe to us what those quantifiable synergies you're targeting to get that 1.4 billion? How does this compare to the standalone free cash flow estimates?
Well, it's just a combined production profile, right? I think
Okay.
midpoint of guidance is 1.1 million ounces of gold between our two portfolios. Um, and so, whatever gold price is being assumed in that vis-a-vis, analyst consensus numbers is what results in that. So that's what gets us there. We have a slide in the presentation that talks about where the production is today vis-a-vis that
Hmm.
1.1 million ounces midpoint and where it's going over the near term to grow to as much as 1.9 million ounces. And then we have a CapEx bar chart that shows, and I think it shows $2.1 billion dollars of CapEx to unlock the full value of that growth. Now, is that accurate? Not 100% sure. A lot of these technical reports are getting updated as we speak. So $2.1 billion dollars of CapEx is significant. But even if you took it and said, maybe it's 3, maybe it's 4 billion, with inflation and all the
Hmm.
things that are happening in the world, we're seeing higher costs. So even if you said that was 4 billion, well, the bar chart next to it shows what the free cash flow, cumulative free cash flow looks like over the next 5 years, 26 through 30, after building is north of $9 billion dollars. So again, it's
Wow.
a very strong business, stronger together, has a significant re-rate potential when you look at the pro forma company versus its peers on a number of key metrics everyone looks at. So it and again, that free cash flow number again would be analyst consensus numbers. So,
Hmm.
take that for what it's worth, but, they're plugging in, I think long-term consensus somewhere between, 4 and $4,200 per ounce gold is what was being used in those estimates.
Okay. The merger's probably going to close around Q3. So we got a little bit of a runway here, but Greenstone and Valentine continue to be in that ramp up phase here. So how are you managing the integration execution risks of the merger while also ramping up these two cornerstone assets?
Well, fortunately, both companies have really good teams behind the leadership. Darren's
Mhm.
brought in David Schumer and Matt McPhail, and a number of key individuals, but also really high quality general managers at each of their assets that yes are aware of what's going on, of course, but their most important responsibility is to continuously focus and safely deliver the assets full potential. And again, that's ramping up Greenstone to 27,000 tons a day of throughput and 200,000 tons a day of material movement at the operation. Jason continues to ramp up Valentine, getting it to 6,800 tons a day or beyond. February and March, we were seeing, I think we were over 100% of nameplate at Valentine. So the teams behind the business are very focused on what they're doing, which allows Darren and others to continue to work on this, integration. We can't get ahead of it yet. We've got to go through all the regulatory process to get there. But at this point in time, the market is looking upon this, at least initial indications, as favorable. Looks like it makes sense. A no premium deal makes sense for the combined company to have an opportunity to re-rate beyond. So, yeah, shareholder looks like, tentative dates right now, looks like shareholder vote would be sometime in the second half of July. Anticipate closing the second half of August or early September. So there's some work to do, but there, you can't do too much in the way of
Right.
business combinations and integration. You can do some preliminary planning and things, but you can't do too much until the deal is actually voted on, approved to proceed. But no doubt, part of the reason both of these companies have been quite successful is because of the quality of human capital they have behind them in order to focus on all of the things that need to produce gold bricks, gold bars.
Yeah,
And
yeah.
fortunately, we have those teams.
Greenstone, Valentine, Musselwhite, going to be carrying this company, full steam ahead here. I think what people also need to remember and consider is the development level, late stage development level projects within this combined portfolio. I mean, Castle Mountain, that's its own unique project. Los Filos, I mean, that's something you and I have talked about here in Mexico, Ryan, that I'm uh, anxiously awaiting any more positive news with that ongoing discussions with the local community. But from the Orla side, you're also bringing in South Railroad in Nevada. I mean, this has been a huge project ever since I started dabbling in this industry and investing in junior mining. This railroad has been a project that continues to, everybody's eagerly awaiting this to come online. And that's also now into this new portfolio. Maybe talk about the timeline of how the combined Equinox now sees these dominoes falling to bring more production into the portfolio within the next 5 years.
Well, yeah, sure. And fortunately, based on at least permitting and these preliminary timelines, it looks like we can sequence the growth fairly appropriately, such that you don't have multiple builds happening, starting or finishing exactly at the same time. For example, let's walk through the assets. As your audience knows, Equinox's Valentine gold mine first, completed construction in Q3 of last year, first gold in September, and hit commercial production by November. And then just recently, of course, we've been talking about our phase two expansion, which we would anticipate to start that phase two expansion in the second half of this year. And as we've discussed and we've publicly disclosed, it's about a $400 million capex item that
Mhm.
by the second half of 2028 we should be getting close to completing that construction and then ramping up from 2.5 million tons of throughput a year to 5 million tons of throughput a year. So that's of course on track there, and we'll continue to update the market as that progresses. Second would be, as you just brought up, South Railroad, located in Nevada, going through the Fast 41 permitting timeline and process. And we're anticipating, or I should say, Orla's anticipating a federal record of decision mid of this year, right? And I think they're full on track to start construction in the mid to second half of this year, and then targeting completion of that construction, I would say, on the H2 of 2027. So you've got a two well, Valentine phase 2 ramping up, and you've got, South Railroad, potentially ramping up around that same timeline. Again, around, I think the CapEx is between 400 and $500 million. Then you look at, going forward in the United States with Castle Mountain, which, we're going through the Fast 41 process there and anticipating a record decision at the end of this year. So, if we were looking at a construction timeline, you're probably looking at, again, assuming that we get approvals required to proceed, we would be looking at a construction timeline probably the second half of 2027, when
Mm.
South Railroad is really starting to probably finish construction and start ramping up. Right, so you got a bit of
Yeah.
of overlap, a bit of sequencing happening there, which fits pretty well from a human capital and a capex perspective. And then, of course,
Right.
as we've talked about Los Filos, large optionality there, and the company continues to focus on land access agreements, continues to focus in the background on technical studies as to, the scale and opportunity there to see what could make the most sense if we were to get the third community's land access agreement. So there's a number of things we're working through there, and we're making good progress. We're having good constructive dialogue, but let's see how that progresses. So you've got a nice sequence of North American opportunities coming online with the optionality of Los Filos. And, I don't know about timing of Los Filos, but likely to come following a Castle Mountain complete of a build,
Mm.
which would be the second half of 2029. So over the next 5 years, you'd have a ramping up of Valentine, a build of a South Railroad in Nevada, and then a build and completion of a Castle Mountain in California. If all permitting timelines fit and construction timelines fit, to add, close to 300, 400,000 ounces of gold production from North America.
Okay. With Equinox's Los Filos in Mexico and also Orla's Camino Rojo, also in Mexico. The merger does require not only Canadian but also Mexican competition approval from those countries. Is there a jurisdictional risk here, specifically on the Mexico side, that could potentially delay a Q3 closing of this merger?
Hard to say. I mean, I know the team is already in the process of submitting the required docs to get moving on that. We've
Hmm.
seen other companies that have had differing timelines. Like I think the Equinox Caliber timeline was pretty succinct, and of course we had to go through that process in Q1 and Q2 last year. So that was pretty streamlined. However, we have seen other companies, I think, have some delays and that was a requirement for closing. But yeah, I think the team is on it pretty quickly here, and I would imagine that if we continue to stay focused on that, we should have a reasonable timeline there, and anticipate sometime in September. But we can't always dictate that schedule.
Yep. All right. All right, Ryan. Not too bad from a small agile team focused in Nicaragua to a multi-million ounce potential producer in this new Equinox Gold. It's been a ton of fun to watch you guys continue to grow and do deals and get this far. And looking forward to getting this thing closed. I mean, it almost feels like Nicaragua doesn't even fit the portfolio anymore, to be quite honest with you. And that was really the
It's
centerfold of
it,
the
it
old caliber.
It has come a long ways, and it has evolved a lot, but you look at Nicaragua, and I hear your point on that. You know, when Caliber started, looking at and operating in Nicaragua, um, I think I've said this before, I think we had less than 100,000 ounces of reserves.
Yeah.
We were anticipating producing 50 to 60,000 ounces of annual gold production from El Limon. And because of the consistent investment into those assets, we've now produced at Nicaragua 1.4 million ounces of gold. We have grown the reserves to, I think at the end of 2025, we're sitting at 1.1 or 1.2 million ounces in reserve. And the company has got a great path of 5 to 10 years in front of us now, and the company currently, the midpoint of guidance this year will be 225,000 ounces out of those assets. And so this is a real testament to the way Darren runs his business. Reinvest back into your existing operations. Reinvest into exploration, reinvest into development. And here we are today with that, rock solid production profile, much better than what it was in 2019 when we had originally acquired it. So it makes me think like, we will continue this philosophy in business. We've done some quality mergers and M&A along the way to create value for shareholders, but always Darren has been focused on reinvestment back into exploration and mine development. It wouldn't surprise me to see an exploration budget next year, assuming everything comes together and, under the pro forma umbrella, that we're probably somewhere between 150 and $200 million a year of reinvestment back into exploration.
Wow.
Because, as we're depleting our existing resources on a daily, weekly, monthly basis. The best and the highest return of capital is finding gold at an existing gold mine where you have processing plants in place. And fortunately, we were able to do that well in Nicaragua, and I think we'll be able to do that well across our portfolio, for the sustainable and longevity of these assets, but also discovering new resource zones will have very exciting and meaningful impact on the operations, the stakeholders, and for the shareholders. So
Yeah.
let's see how it goes.
Yeah. Well, as a shareholder, certainly very excited, happy for everybody there. Really looking forward to version 3 of Equinox. Maybe it's version 4. Who knows?
Head
But it
down,
continues
grind
to
on.
grow. Yeah, that's right. Exactly. All right. Equinox Gold trading on the TSX and the NYSE with the symbol EQX. We will continue to cover the story into closing of this deal later this fall. Ryan King, thanks so much. Good to see you once again. It's been way too long, but I know you've been busy.
Thanks, Trevor. Always good to be here.
Yep. The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.